All right, folks, Brandon Chapman with today. It's another edition of the Thea Night video for June 22nd. It's a Wednesday, 2022. It's good to be with you to talk about it. Obviously, Don and I did the switcheroo. He's out. I'm in. We have the holiday, and he's traveling to Arizona as well. So anyway, let's get rolling. So the title of today's session is Option Bears Reloading as Bulls Are Feeling Spry. Basically, we had, a couple of up days. Now, obviously today, we're fading from the high. We're actually down slightly, 0.14% at the moment. Things aren't necessarily looking positive. And, certainly things were more optimistic. Bulls were feeling more spry earlier in the day. Certainly high short interest stocks generally have done okay today. But look right in here, we got technology and we've got cyclicals in the bottom 5 performing sectors for today. Those were some of the top performers the last couple of days as we're feeling those high beta names getting squoze higher into the peak. But today we're seeing them fade and we're seeing bears step in, kind of reloading those bearish option trades as the bulls maybe are starting to feel their oats just a little bit. And so as we look at areas of resistance, you'll notice back here, the low corresponding to the highs, we're inching towards that. Doesn't mean we can't have an update tomorrow or another two updates as we retest this area. The risk is obviously to the downside as we're in a bear market. As we look at things like the interest rate market, for example, TNX was lower, but if you notice, TNX, TYX, and FVX, they're all down similarly. So as we're seeing that the yields are falling, we're seeing the curve remain flat. And as we look at the product depth curve right now, /ZQ, what we're seeing is the shifting sands of expectations. Now, they've been relatively consistent for a few days. You go back to the 10th, you go back to the 9th, things that were a little bit different. But notice what's happening here as we move into 2023. Interest rate expectations are flattening out. So basically, what are we seeing? There's more indications that the Fed may have to pause later this year. We're going to get the big rate increase here, a small one in September, maybe a bigger one in October or November, and then essentially the market saying what? They think the Fed's going to be on hold going into early next year. Does that mean we're going to enter recession? Well, we look at /CL on the chart, and you'll see there is some risk to that. Oil's down today, not because supplies are exploding higher, right? In fact, we get the inventory data tomorrow because of the Juneteenth holiday. But what we're seeing right now is what? We're seeing pressure due to the fact there may be demand destruction if recessionary forces are afoot, and more people are calling that out at the moment. And so, again, the risk to oil is that there's demand destruction. We know the supply is tight. We know the production is going to have a difficult time increasing to meet current demand. But if we see demand destruction, we see recessionary force afoot, oil prices may go down. However, that being said, you're not seeing that priced into the futures market for oil as we're still in backwardation, although the curve is slightly more flat compared to where we were in middle of June. So again, we got to understand that, look, there's the risk right now that inflation could get solved a little bit by virtue of demand destruction and recession, and the Fed policy may help precipitate that. But again, as we saw with the ZQ product depth chart, is that we may see that happen quickly, and all of a sudden the Fed's on hold going into early next year. And as I've talked about a lot this year, a lot of big trade on January 3rd and sporadically throughout the year so far for gold, for example, in January of next year. Does this play out in favorably with that in mind? It actually kind of does, that the Fed is going to be on hold in December by virtue of the fact that the market is tailing here and recession forces are pushing. And so as we talk about bears resetting, the bulls feeling spry, again, it's an old bull, so spryness is relative in that sense. But if we talk about some of the areas that bears are looking at right now, one is XLB. So this is materials. And I think the broader material space does have some risk right now. You are seeing that XLB is down today, potentially taking out the lows. We had an update yesterday, tried to rally higher. We're kind of fading back from the high. A trigger could be the low from June 17th if we start to break through that. But today it was the July expiration. So we come in here July, And we look down here, it's a long vertical at 70 and 66. Buying the 70, selling the 66, taking advantage of the favorable skew, buying at 32% implied volatility, selling at 39, makes it a relatively cheap spread for $6 wide. So again, it's a lottery ticket, but it's still, a lottery ticket's got 23 days for this to reach 66, which is not pie in the sky. In fact, it's just got to get to, if we look here at the 70 strike, it's got to get to basically 69 and a half-ish for it to break even. Again, is it a high probability? No, but it's not out of the realm of possibility we could break into this area reasonably in the next few weeks. Another sector that's kind of resetting today, it's IYR. This is one we've looked at a lot as a bearish area. In fact, at the close, we do for TheoTrade clients, we look back here on the 8th. Sorry, it's the 9th. It was the 7th, it was Monday. Oh, no, it was Wednesday. So it was the 8th right here. We looked at bearish trades on IYR, had a huge down move along with other consumer financial stocks, Capital One Financial, Discover, etc. But IYR today, it's a July expiration. So we'll go back to the July. And notice right here, the 88 and 83, it's a what? It's a long put vertical. Notice we're closing out the 89. We're closing out some 85s and 80s. So the idea is we're kind of rolling this up towards 88 and 83 from 85 and 80. So again, it's rolling up, re-engaging with the price, providing a better probability that the 88 goes in the money, but as a bearish trade, it's done for a debit, rolling up from these lower strikes, 85.80 to 83.88. Again, same 5-point spread. So again, resetting, right? Rolling up. Another one here is HYG. So look at HYG. We're looking at the September expiry. You'll see there's some activity here as well, but that's closing because it's less than the open interest. We come out here to September. And again, a lot of stuff going on, right? But you start to kind of parse through it. So we got the 70 here, 30,000 and a 66. So in essence, what are we doing? Potentially rolling out here to the 66. Could possibly even be a long put vertical. As we look at the option time and sales, you'll see some of this stuff occurring at the same time right here, for example, right? And so ideally, probably what we're seeing here is we're just rolling out, extending the time frame, right? So it's been down a bit. Now we're just trying to accept or extend the range of potential movement. We're consolidating here. It's just expecting HYG to move lower. Another one here, EWC. So if you're Canadian, right? Here is the Canada ETF. Again, we're bouncing. We're rolling over today. And again, significant trade in EWC down here at the September expiration, 30.25. So what are we doing? We're just resetting again, right? To the downside. So something to watch here at 30 to 25. And you might look for this thing to maybe trade through today's low, for example, as a trigger. But again, it's looking downside all the way down to 25. That's a ways down there. It's a big, big move. And if we see further selling in oil, that might get us there in other commodities. Another one is XBI. This is Biotech. So Biotech's done pretty well this week. Sorrento Therapeutics, it's on my high short interest watch list. If I can find it. SRNE, for example, it's getting squoze, right? So again, you get these biotech names that are kind of they've done well the last few days. We looked at other pharmaceutical companies, but today what you saw was trade coming into the July expiration. And what's happening here? We're looking for downside price action. Let me just find the exact 66.60. So we got this 66 and I'm missing it here. Anyway, 66 is being bought mostly. Again, downside expectation in XBI as well. Again, we're just seeing kind of this resetting. We get the rally. Now we're seeing the bearish trades come in. However, it's not entirely bearish. Jets is one. We saw some bullish activity last week in American Airlines. Jets is down here kind of scraping the bottom of the barrel. There was some bullish trade in Jets today at the September expiration. So we're seeing a bit of a transition from buying goods to buying services. And actually, that looks like it's closing activity there on the SEP 18 there. So I won't worry about it. Thought it was bullish for a second. It's not. We're probably just closing it out. But anyway, we're probably closing out the SEP 18 there. But again, there has been some, are we buying more services? That was one of the areas that were elevated in the CPI report. And again, we transition from buying goods to services. This is a risky area. We kind of got a little bit of rally in American and Delta that we had bullish activity on last week. But watch it. Again, we might see this start to roll over and could create another bearish opportunity if they start to turn. But again, at least for today, and maybe last week looked like things were skewing a little more bullish in that space. One stock or one area that's been really bullish. We talked about Chinese stocks a lot over the last few weeks since May 26th, right there. A lot of bullish option activity. For Li Auto, for example, it's really gotten ahead of itself. It's at an area of resistance right now, going back for the last year plus. And today, we're seeing this kind of long-legged, kind of spinning top doji formation up here. Maybe it's kind of a tombstone doji, although it's have a longer upper shadow if it did. But Li Auto is interesting. You're seeing some bearish activity creep in this 24 June expiration, only 2 days away, but creeping into this 32 strike. So watch some of these Chinese stocks, NIO, Li, et cetera, that have done really well. Do we start to see a bit of a turn in the sentiment, especially Li? Look for it to trade through today's low as maybe a confirmation, but this thing could see some downside here. And as you start to look out maybe a few weeks, let's go out to July, for example, notice the skew out here is favorable to buy a put spread. So rather than just going out there buying a way out of the money put, you could do a put spread that's closer to the stock price pretty cheaply with decent reward to risk, like on a Li Auto, for example. So something to watch is that bearish activity may be turning. Some of the bulls can't give up. For example, Carvana, we've been kind of grinding out here. Is this company's a going concern? I don't know. They built a big tower vending machine close to where I live, and it's an interesting concept here. But somebody's looking for some upside. This is a relatively high short interest stock. Could be a form of hedging that's going on, but hedges still are indicative of potential movement. Notice the 50 and the 80 here, 30-point spread. Again, relatively cheap. The skew's a little bit favorable, not a ton. But again, it's just taking an upside shot that Carvana could reach 80. That's probably not the odds-on bet. But again, if you're short and you're hedging, but it does present, maybe an indication that says, hey, is Carvana a bit oversold here? Maybe. But again, it's probably not the best one to bet on here. But again, I thought that trade was interesting and I'd share it with you. So the point being is that we get a bear market rally. We're looking for the opportunity to step back in and start to go bearish. I think what we saw today regarding some of the fading from the highs as the market just barely closed here, some of the fading from the highs and some of the bearish activity stepping in today, it does show that the bears are maybe reloading to the downside right now as we start to price in more recessionary pressures. All right, folks, we'll catch you back next week on Monday's video. You have a great